Hey everyone, it's Brian with Stock Trading Live. Thanks for checking in. Today we're going to be doing a video talking about a beginner's trading strategy. It's going to be a low risk strategy for people who are just getting acquainted with trading stocks and becoming familiar with how stocks move. We're not going to be using options in this strategy. You can use this strategy to get comfortable with price action and use that to work your way into options, which I think is the safest way to get into trading if you aren't willing to take a lot of risk and you don't have much capital to start with. So in this strategy, I'm using an app called Public. It's a very cool app. They have a social media like feature where you can follow people and share your trades and ideas with other people. They also offer fractional shares, so you can buy between $1 and anything higher than that at a time of stocks. So you can see here, if we wanted to trade this company, we could buy just $1 of stock. So having fractional share access is pretty important to this strategy. So if you are interested in using this app, there's a link in my description. If you sign up using the link, you'll get between $7 and $50 in free stock of your choice. So it's pretty much free money to start with. But what we're doing in this strategy is we are essentially swing trading and a little bit of scalping or short-term day trading. So what we're doing, my account is currently valued at about $2,000. In the past 3 months, we have about a 28% return, which is about $430 of profit. So we've managed to get some decent returns using exclusively this strategy. So the strategy that I'm talking about has, I'm using it myself. I've been testing it myself. And so it's not just something that I'm, just telling you guys to do that I'm not actually doing myself. So with this account, typically what I'm doing is, first of all, I'm starting with my watch list. I have a watch list of a bunch of different stocks that I follow and am comfortable with trading. I know how they move. I know what price they're usually trading at. That way, if I see one of these stocks at a discount, or, if something is cheaper than it normally should be, I can take advantage of that and I can buy. With this strategy, what we're doing is essentially dip buying and momentum trading. So I'll break it down into two sections. We'll start with the dip buying. So when I look at my watch list, I have all of my stocks here, a lot of blue chip companies. We're really only trading blue chip companies. We're not trading pump and dumps or penny stocks or extremely speculative stocks that you've never heard of. We're really trading, well-known names that you probably know most of, and they're household names. So that way, if we are caught bag holding, if the trade doesn't go our way and the stock that we buy actually goes down, well, we're not going to be panicked into, what's going to happen with the stock. Is it going to go bankrupt? Is it going to get delisted? We're not going to have all those extra worries that come when you have penny stocks and all of these other stocks involved. So once we have our watch list, let's say we're looking at our watch list, everything, looks about how it should. Stocks are kind of, where they normally are trading at, but all of a sudden we see a couple stocks that are trading at a discount today. For example, let's say we see JP Morgan, it had a bad day today, and we think, this might be a good price to buy in at. We've been, watching the stock for a while. I'm not necessarily saying JP Morgan is a good buy at these levels. I don't think I would necessarily buy it here. But let's say, for example, it was trading at $87 instead of $97. Well, you might think, well, that might be a good price to, buy and take a trade with. So what I would do with my strategy is pretty much purchase a small position. I would use 5% or less of my portfolio to trade this position. So let's say we bought $100 of stock. We would get just about one share. And what we would do is essentially we would either, first of all, trade and sell out of the position for a profit when it became in profit territory. Let's say that it went up 1 or 2%. We could sell it, take our 2% profit, which would equate out to about $2 in profit. We would get $102 back, and we could move on to the next trade. And that's pretty much what the strategy is revolving around, is buying a dip, selling it for a small profit, and then moving on to the next trade. Now, it doesn't sound that sexy of a strategy. It's really nothing special. It's not an advanced strategy, but it is actually pretty useful, and the gains can compound quickly. So you might think, okay, we're buying, $100, we're making 2% on that, we're only making a $2 profit, who cares? And that somewhat is true to an extent, but at the same time, we're not just trading one company at a time. Let's say we did that $100 purchase order, but we did it across 10 stocks this time. So if we had a $1,000 trading account, we could put $100 into 10 different stocks. And the good part is we get to pick the stocks that we choose, and also we get to pick when we purchase the stocks. So the idea with this is to get an edge by, first of all, understanding if the stock is trading at a discount and what type of discount that it's trading at, and also picking the stock that, if it doesn't go your way, if it continues to go down, the stock is generally in a bullish trend. The stock generally goes up over time. That way, if it does go down for the short term, it's not too big of a worry. For example, if we were trading Facebook stock and it dipped, 1% today or 2%, and we decided to purchase, and Facebook stock continued to go down, well, you wouldn't really necessarily be wanting to panic sell. You're not like, uh-oh, what's going to happen to Facebook? Is it going to go bankrupt? Why is the stock going down? You pretty much understand that Facebook is a quality company. The stock generally goes up over time. So if we do buy the dip, chances are at some point within the next month or two, we'll be able to sell it and take our profits. So that's pretty much what we're doing with the strategy. Is we have our watch list. We buy at key levels, at support levels, or just generally buying into weakness on a quality stock, taking small profits, moving on to the next trade, and doing that every single day. That's what I've been doing with this portfolio, making small, $100, $200 trades, making between $2 and $5 per trade, and just doing that over and over again. And since we've been doing that for the past 3 months, we've made a 28% return using this strategy. So the other aspect of this that we're going to talk about is momentum swing trading. So with a stock like Amazon, buying a dip, it will happen once in a while, but you're not going to get a huge dip buying opportunity that often. It might happen maybe once or twice a year. So for these type of examples, we could do something called momentum trading. So with momentum trading, you're taking a stock like Amazon or like Shopify or like Apple that's, generally a growing company. These companies are growing very quickly, and just looking at this Amazon trend, it's been just going higher and higher all the way since March, just extremely bullish. So what we could do during this period of bullishness is ride the momentum upwards. Let's say that we wanted to trade Amazon. Well, what we could do today, let's say we wanted to buy the dip, which, just for example, I'll actually do that right now. I'll purchase $50 worth of Amazon. We're buying the small dip, and now what we would do is wait for this position to go into positive territory. So right now we are even on our position. If Amazon goes up to, $3,100 per share, or, somewhere in these levels above our purchase price, well, what we could do is we can sell it. We could take our small profit, which, if we get a 3% profit, we would make about $1.50 on the position, and we could move to the next trade. And now let's say we did that with Amazon. Now let's say that we want to do that with another momentum stock, such as Shopify. Well, we could go purchase another piece of Shopify, which I'll actually do live as well. For this one, we'll get $50 worth of Shopify. We buy $50 here, And now when these positions go up, the idea would be to sell them to take a small profit to get our cash back and move on to the next trade. So the strategy is pretty straightforward. I mean, it's not rocket science what we're doing. Essentially, we're either just buying the momentum or we're buying the dip. We're taking small profits. This isn't a long-term investing strategy, but you could use the same principles of the long-term investing strategy, the buying the dip and the buying quality companies, stuff like that. You could use the same principles, but with this, what we're doing, we're buying the dip. Once the company bounces up a little bit, we take our profit and we buy the next dip in a different company or the same company if, a dip happens after that. So that's the strategy, guys. I'm not going to, overcomplicate it or break it down too much. It's pretty simple, is just create a watch list. It doesn't need to be a ton of stocks. You can start with 5 or 10 stocks. Wait for a dip buying opportunity. Once you see it, once you think that if you buy here, that you have a good opportunity, you'll be able to sell this for at least, a couple of percent or even 1% more than you paid for it. Take the profit, move to the next position with your cash. That way, first of all, you're not using options. Your maximum risk is very low, considering if you put $100 into a company like, Amazon or Caterpillar, the maximum you could lose is the full $100 if the company goes all the way to zero, which the odds of that, is slim to none. So with this, you're taking on very little risk. You're getting little reward at the same time, but it's also a good way to learn price action. If you can buy the dip on a stock and sell it for a profit, chances are you could buy a call contract on a stock and sell it for a profit, for more profit, since the contracts are leveraged. So that's why it's good to practice this way, so that you can understand price action and, feel more comfortable with buying and selling stocks for when you do move your way into options trading and, different types of trading. So that's the video, guys. As always, I appreciate you guys watching. Thanks for checking in. Don't forget to like the video, subscribe to the channel, comment below if you have any questions, and we'll talk to you guys soon.